Bitcoin has been oscillating between bear and bull market territory, yet trends in miner difficulty, miner revenue, and active users were all up over the past year. It will likely be slow and choppy path for the foreseeable future, but this is not an unusual occurrence for Bitcoin, as it tries to shake off a brutal bear market. Despite some lackluster short-term trends, there is a strong belief that Bitcoin will rebound just fine and continue to treat patient investors well in the future. But only 1% know about this. When it comes to Bitcoin, the conventional wisdom is that it is a risky, highly volatile asset subject to sharp price fluctuations. This is true, since according to history, Bitcoin has been characterized by high volatility. But that is about to change. Since April, Bitcoin's volatility has been on the decline. It has touched historically low levels in late summer, and now there is a metric that could determine Bitcoin's future price trajectory. By just any measure, Bitcoin's volatility is trending down and approaching all-time lows. This was an issue last year when crypto traders began to complain that Bitcoin was becoming boring. Instead of seeing massive price swings daily, the price of Bitcoin seems to be moving within a very narrow band. So if you're wondering why Bitcoin has not been able to punch through the $30,000 mark recently, or why there is little to no movement after major news events, this is the reason why. In mid-August, a popular Bitcoin volatility index touched a new low, and certain crypto analysts were quick to point out that the exhaustion and apathy for Bitcoin. However, zooming out, the current period stacks up against the previous historical evidence. This period resonates with Bitcoin's volatility since 2016, and it is eye-opening. At a glance, it's easy to see how Bitcoin's current volatility is at historical lows. Annualized volatility previously approached 100% to 200% during certain periods, and now it's around 10%. An opinion about this extraordinary change to Bitcoin's volatility is that this is the new norm. As Bitcoin becomes increasingly mainstream and as more institutional investors boost their allocation to crypto, Bitcoin could lose some of its volatility. Simply put, since large institutional investors have much longer investment horizons than speculators and traders, this should help reduce some of the twists and turns in the Bitcoin price. There is some evidence to support this theory beyond just lower volatility figures. For example, the supply of Bitcoin on cryptocurrency exchanges appears to be on the downswing. The basic idea here is that as more Bitcoin goes off exchange for secure long-term holding, less Bitcoin can be traded on the major crypto exchanges, and yes, this should reduce volatility. This sounds great, but the opposing point of view is that the current period is the proverbial calm before the storm. It looks like this unprecedented period of lower volatility could precede a major spike in volatility as Bitcoin explodes in value. In the past, this has been the pattern with Bitcoin, because in two different cases, a prolonged period of relatively low volatility led to Bitcoin skyrocketing in value. But remember that past performance is no guarantee of future performance. Volatility is important because it directly impacts the future price trajectory of Bitcoin. High volatility increases the chance of major price swings both to the upside and the downside. This metric is what makes huge Bitcoin rallies possible, and these rallies draw speculators and short-term traders, making Bitcoin even more volatile. But moving forward, when you hear investors suggesting that Bitcoin could soar to $100,000 or skyrocket to $1 million per coin within a very short period, they're likely assuming that Bitcoin's volatility will eventually return to its previous levels, thus enabling huge price swings over a relatively short period of time. However, let's try to be hopeful here. What if the lower volatility is the new norm? Then the chances of Bitcoin spiking to $100,000 anytime soon are very much limited. And at this point, it's too early to say that Bitcoin's volatility is in a permanent decline. Crypto has always been a risky, high volatile asset class, and Bitcoin's current volatility could simply be a historical aberration. Well, maybe it's not, considering all the new institutional money flowing into Bitcoin. So keep your eye on Bitcoin's volatility, given that it might end up being one of the biggest factors determining whether or not it can soar in value heading into 2024. Plus, one of the biggest investors in the market is very bullish about Bitcoin. It is no one else but Cathie Wood. With an investment philosophy centered on innovation, CEO Cathie Wood and her firm ARK Invest are natural fans of Bitcoin, since the large cryptocurrency by market cap is the most decentralized, secure, and valuable cryptocurrency on the market. ARK is confident about its potential to revolutionize finance. Every month, ARK publishes a report showcasing various blockchain-based metrics, investor behavior trends, and macroeconomic factors. This analysis provides valuable context about Bitcoin's status and potential trajectory. In this vein, one of ARK's favorite metrics to follow is realized capitalization, compared to the more commonly used market capitalization, which is calculated by multiplying the current price per Bitcoin by its total circulating supply. The realizing cap sums up the value of all individual Bitcoins based on their last transaction prices. Typically, the realization cap is much lower than its market cap, but considering it's a metric, it has other benefits, such as being more resilient to short-term price volatility and reflecting actual economic activity more accurately. In ARK's most recent report, the continued recovery of Bitcoin realized cap is a significant point of emphasis. Since bottoming out in November, the realized cap has grown 4% this year. And while that might not sound like much, any progress is beneficial, and especially considering that its recent decline was the worst it's been since 2012. Now, as a result of near record lows in trading volumes, Bitcoin's volatility this year has been low as well, but it came roaring back in mid-August. As a matter of fact, on August 17th, rumors broke out about how Elon Musk's SpaceX had sold its Bitcoin holdings. As expected in a knee-jerk reaction, Bitcoin tumbled more than 10% in a matter of hours. The ARK CEO believes that the drop was overdue and more pronounced than it should have been due to pent-up open interest in the Bitcoin futures market. Futures contracts allow traders to speculate on Bitcoin while using leverage, and while not recommended, they play a significant role in Bitcoin's short-term price movements. If Bitcoin is set to explode, then it's possible to conclude that Ethereum is also set to explode. The apple doesn't fall far from the tree. Recently, a widely followed analysis expressed bullish sentiment on Ethereum amid the crypto market trading in a range. Pseudonymous crypto trader Altcoin Sherpa told his Twitter followers that Ethereum could go up by 59% and reach within sight of $3,000 before correcting. Based on his chart and speculation, Altcoin Sherpa projects that Ethereum could rise above $2,700 in the fourth quarter before reversing to around $1,250. He stated, "ETH. Wouldn't be surprised if this goes as high as near $3,000 before a pullback. Still determined to see how far the pullback would go. It's going to depend on the macroeconomy, in my opinion. Still bullish for now though." Also, in a report on X, Bloomberg reporter Eric Balchunas wrote that the Securities and Exchange Commission is making moves to speed up the rollout of certain Ethereum exchange-traded funds. According to him, the SEC has requested ETF filers to update their applications to get those instruments up and running for trading. Of course, this only concerns Ethereum ETFs, but it's easy to imagine that if the regulators are ready to turn on the lights for that crypto, then it is prepared to do so for a host of other coins and tokens. Plus, the crypto resistance in the official corners seems to be melting up a bit. Other factors playing in the background are also contributing to the current crypto bullishness. The equity market continues to be generally frothy, which not only fuels hopes for riskier assets, but also gets investors to consider non-stock plays like cryptocurrencies. Interest rates remain relatively high and look set to stay that way for some time or even rise. Arthur Hayes, the co-founder and former CEO of crypto derivatives trading platform BitMEX, is also forecasting a massive rally for Ethereum, asserting that it could run up 1,556% from its current price of recording at $1,875 and hit the $31,063 mark. He wrote this in a blog post stating that the price of Ethereum stands to benefit immensely from artificial intelligence technology. Hayes mentioned that he envisions AI applications establishing decentralized autonomous organizations to carry out smart contracts. He added that Ethereum is the most suitable foundation for this scenario, given its extensive adoption as a decentralized virtual machine. According to Hayes, tokens issued by AI DAOs will trade on decentralized exchanges, or DEXs for short, primarily built on top of Ethereum. These updates may look like mere information, but taking a closer view, they convey weighty things that are set to happen in the crypto market. An explosion is coming, but the question is, are you ready for that explosion? But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.